Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The JPY eventually increased the gains following the BOJ rate hike as Governor Weda delivered some hawkish comments during the press conference. On Wednesday, we had the FOMC rate decision, and as expected, it was a dovish one. Fetcher Powell hinted to a September rate cut and didn't even close the door for several rate cuts before the end of the year. Yesterday, we got some general risk off in the markets, which was triggered by an ugly US SM manufacturing PMI release. The market has now fully priced in three rate cuts by the end of the year for the Fed and continues to raise the chances of a 50 bps cut in September. For those bullish on the bear, this might open an unwinding opportunity if the aggressive rate cuts get priced out like we saw in Q1 2024, and if the data from Japan remains weak enough to end the BOJ hopes for further rate hikes. Now on the daily chart, we can see that USDJPY reached this key trend line around the 148.50 level, where we can also find the 61.8% Fibonacci retracement level for confluence. This is where we can expect the buyers to step in with a defined risk below the trend line to position for a new cycle high. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into the next support around the 140 handle. On the 4-hour chart, we can see that we have this downward trend line defining the current bearish momentum. From a risk management perspective, the sellers will have a better risk reward setup around the 152 level, where they will find the confluence of the previous swing low, the 50% Fibonacci retracement level, and the trend line. The buyers, on the other hand, will want to see the price breaking above those levels to regain control and increase the bullish bets into new highs. On the 1-hour chart, we can see that we have another minor trend line here. The sellers will likely keep on leaning on it to position for a break below this major trend line. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into the 152 resistance. These red lines define the average daily range for today. For the upcoming catalysts, today we conclude the week with the S&P report, where the consensus expects 175k jobs added in July and the unemployment rate to remain unchanged at 4.1%.